CNBC TV18, embarking on a quarter century of excellence.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. What a week it has been, a roller coaster one. Actually, it's not been a roller coaster. It's been a one-way upward kind of ride, if you're using sort of game park analogies. I'm Prashant. With me, my colleagues Sonia and Nigel. Hi, morning.
Hi, good morning. It's Friday and there are no complaints really, right? Traders, investors have all had a solid month so far. And I think they're just going home with bags of money. That's the only way to put it. That's the only way to put it, right? And I hope the going is good.
I have a literal image of people who are...
But it's a good time as well if they're going home with money, because it's beginning to look a lot like Christmas,
Yes.
right? And I think the weekends also, I think all of us would have some plans. So the week has been very busy.
Yeah.
Gear up towards the end of Friday and say the kids at this party you need to go for, you need to show Santa, you need to write your letter. So the weekends are even more busy. So it's a fantastic time, I
So
would
good
say.
that your wallets are full so that you can go and spend them across.
Mine, not mine, but I have to spend
Traders
anyways.
and investors.
All right, well, let's just, as always, kick it off with a quick rundown of what you need to know as we begin another trading session then. You've got yesterday, for the first time after this week started, that we had a bit of a pause which came through. Otherwise, I mean, we were getting used to double centuries, triple centuries, more than that. Yesterday was a pause. So the market actually, on the Nifty, posted a negative daily close, but it was not a very convincing one. Right, it was just about a 0.17% kind of cut, nothing deep. The hourly averages did not break even once during the course of the day. But the backdrop is that we did get a bit of a negative technical pattern, an evening star formation, if you must go into details, etc. So we'll need to see if this is, this gets negated immediately, or perhaps there is some follow through. Institutional numbers on the cash side were very, very muted yesterday. And on the derivative side, FIs are now long 31,000 contracts in index futures. I mean, it's interesting. Last Friday, as we came into the week, we ended with about 50,000 contracts net short on FIIs. And I think by the time we end this week, I think you'll be that much long on the other side. And that's been, the sharp, swift 4% move that we've seen on the indices. Overnight, what happened? You had markets which were up. NASDAQ ended about 1.3% higher. The big mover, of course, was Google, which went up about 5% or so. In terms of macro data, the 10-year added about 4 basis points. The dollar index came off about 0.5% or so. So nothing really to take away. And I've been saying this for the last couple of days. In terms of, the yield, it's been largely lower. We're at about 4.1 compared to 5%, not very far back. But in terms of day-to-day kind of takeaways, there's not been very much. You had the initial jobless claims data which came through that rose, but very modestly. Later today, around the US market opening time, we get the monthly data, the jobs data for the US, the November number. And that is the big one which markets will wait for. The kind of sentiment out there is that it will be a very, very weakish number. So we'll see if that is indeed the case, or we can get a surprise. Just one more thing before I kind of come back to the levels here. There's something happening in Japan. You got some very large moves coming through, right? I mean, same time yesterday we were talking about that 4% drop in oil prices. This morning, it's Japanese bond yields and the currency. So bond yields, the long end basically went up about 10 basis points. It's the biggest rise since December of 2022. And you got the JPY, which sharply rose, which means that the dollar JPY, the currency cross, fell 2%, is the largest move since basically the beginning of this particular year. What is the trigger? You basically had a very, very weak auction for the 30-year bond, which the government was sort of putting out, the Bank of Japan was auctioning. And you also had comments from Bank of Japan officials saying that they want policy normalization. Remember, across major markets, Japan is the only country where rates are still at 0%. It's not moved. It's not budged. Others have gone up 500 basis points, and now we're starting a rate cutting cycle, hopefully. Japan is at 0%. So it'll be very interesting to see if, this one also, when other rate cuts are looming elsewhere, Japan actually starts to increase rates. It's important what they do, essentially, because the JPY is a very cheap currency. It's used as a funding mechanism Berkshire Hathaway, for example, recently issued yen-denominated bonds to raise money. So there are implications in that sense. Let me just quickly circle back to the levels here then. As I said, we got a negative close. The recent high on the Nifty is 20,961. That's the first level on the upside, which the market will, which you need to watch out for. If you are able to take that out in a flourish, then you're basically looking at much higher levels. But that is the first marker on the upside. Very near-term supports, we've been using hourly averages for this. Comes in at 20,887. They've moved up a little bit. And 20,650 is the 20 and the 40 hourly averages, which, yesterday, even though the market was down, never broke. We came close to it, but did not break. And if you're able to take out the recent high, as I said, 21,100 is the level which kind of we put out at the start of the week as well, Monday and Tuesday. So that still remains the level on the upside. Bank Nifty closed absolutely flat in trade yesterday. So watch if yesterday's low, which is 46,507, gets broken. If that does get broken, then the hourly averages come in at 46,151. That's the 40 exponential hourly average, which should act as a bit of a support. I'm using very near-term levels because of the moves that we have had. Otherwise, the longer daily averages are very far away. For the Nifty Bank, the 47,260, which is the recent high, should act as a bit of a resistance. Basically, the upside level to take out, and then we march higher there. If that happens, 47,700 is still pending. The Nifty did it, but the Bank Nifty did not. It had 2 days of very slow trade. So we'll see what happens. The GIFT Nifty should come up on your screen, and I think we'll pick up the action as the day goes on. 40 points higher is what the GIFT Nifty is showing. The big one also, of course, is the RBI, right, Sonia?
Absolutely. And, generally on event day, on RBI policy day, the market just waits for the outcome, right, and then takes the call. So it wouldn't hurt anyone to just wait for what the RBI policy has to say. There is, of course, no move on rates expected this time around. So this is going to be the fifth time when the RBI keeps the interest rates steady. Remember, there has been some inflation some relief on the inflation front. So that's another reason why there is a pause expected this time around as well. But there are some other announcements that the street could watch out for, whether it's increasing the risk weights or even selling bonds in the open market. So perhaps some of these things is, what the market is looking out for. The commentary is also crucial. There is no change in stance expected, but any indication of a change in stance is something that the street will watch out for very closely. Remember, inflation is cooling off, and the expectation is that the rate cuts could come in from the second half of the fiscal year. So any indication on that will, of course, be a big positive trigger for the market, but the market is not expecting that at the moment. The US markets were also mildly in the green. The November jobs report is awaited, as Prashant was also mentioning. So that's the other big trigger. But for our own markets, the Nifty has been consolidating around the 21,000 mark with a positive bias. So yes, the GIFT Nifty for now is suggesting that it's going to be absolutely flat opening. Perhaps wait and watch, as we move into the RBI policy. Foreign and domestic investors sold in the cash markets. There's been a big rally up until now. So let's just chart the path, right? The Nifty is up almost 700 points in just 5 trading sessions. And the Bank Nifty rally is something that the street is watching out for very closely. If this market rally has to continue, then the Bank Nifty has to continue to participate. Remember, the Nifty Bank is up 7.2% in the last 1 month alone. So I'm watching out for that heavyweight to continue to move ahead. But what else are you looking at?
Well, Sonia, various reasons why the markets needed to pause yesterday. At 7 straight sessions, we were winning. We had last 2 sessions where you had the Nifty weekly expiry, the Nifty Bank weekly expiry as well that played out. Flows seem to be on the sidelines, ahead of the big event. And, also you have 2 big cues today. One, the domestic front, the RBI. Second is on the global front where you get the US jobs report. And data points coming in this week itself indicate that maybe there are signs that the jobs market is cooling off. So you'll want the non-farm payrolls data to look a little bit softer than what's being expected. Yet again, yesterday, we had long positions that were added. More than 5,000 long contracts. Short positioning that was added close to around 3,000 contracts. Takes the long positioning to around 57%. And if we pull up a chart, after very, very long, I've seen, in the entire week, we have seen longs that have got added. Because at the start of the week, we were negative, it was net short to the tune of close to around 50,000 contracts. And just take a look at it. On a day-to-day basis, you have more longs that are added in comparison to the shorts. Now, in fact, the long positioning is added on 32,000 contracts. Two strikes were active. 20,900 put and 21,000 call. Both of them fair bit of open interest premium, roughly around 80 to around 110 rupees or thereabouts, which brings us to the levels. I'll tell you what, it's a 400-point range that I'm looking at. Last two sessions, we went to 20,800 and we bounced off those levels. In terms of a stop loss, I think it's at around 20,750. So the downside, maybe it's limited to around 100, 120 points from here. But on the upside, that 21,050 odd, that should be a bit of a resistance zone. Key factors to track: expect the markets to consolidate a little bit ahead of that event. If there is no hint of any kind of hawkishness, we don't want the RBI governor to sound very, very dovish, but no hint of hawkishness, markets will take it with both hands and will resume the uptrend. And institutional flows need to be tracked. It appears for the last couple of days, they are waiting by, let this event get out of the way, and then we could see resumption of flows. And the FIs, we know, they are, they've reduced positioning and they've been quite underweight the Indian markets. So you'll want to see the return of flows out there. For starters, I think the gift and flow is indicating a bit of a positive start. So let's see how that goes. The RBI, governor, that's going to be the big cue. And from there, I think we resume the up move.
Guys, I just realized it's less than 20 days left for Christmas, right? So, we just keep talking about the here and the now, but its festivities have begun and it's the end of the year. A whole year has passed by. So, all of us should be in high spirits.
400 hours and I'm done for the year. 400 hours, so I can't wait for that. 20 days and all.
The big Christmas plans this year.
Absolutely. 2 more Fridays and I'm off for the race.
I thought you were going to pick up on Sonia's high spirits. Kind of.
Yeah, I know.
Navin, who's the naughtier one?
Yeah.
I'm just footing the bill, but the bigger party animal is there.
But who is to say you can't start early in the morning, right? I mean,
the teetotalers.
Teetotalers talking, all right. But we're all in high spirits here in the studio. But let's kickstart the show, actually. Lots to talk about as we get into the last trading day of the week. On the equities front, Chris Wood of Jefferies says that India's moment has been only furthered by the result of the recent state elections, which came in better than expected for the BJP. That prompts greed and fear to adjust the Asia-Pacific ex-Japan relative return portfolio to maintain the overweight call on India and neutral on China. Accordingly, the weighting on India will be increased by 1 percentage point, while the weighting on China will be reduced by 1 percentage point.
All right, well, let's get you some money market views now. This is coming in on the rupee. Lakshmanan V of Federal Bank says that the Indian rupee remained relatively stable this week ahead of some key economic events like RBI MPC and US employment data. Crude at 5-month lows, along with the 10-year US Treasury yield at 3-month lows, along with robust inflows in equities, may support the rupee in the coming days. He expects the rupee to trade between 83.2 to 83.48 to the dollar for the next few trading sessions.
And on the bonds, Lakshmanan says that the bond markets have traded in a narrow range with a positive bias, broadly tracking the fall in crude and the US Treasuries, which have fallen 90 basis points since October end. Economic data from the US and dovish comments by the Fed officials have increased market expectations of a rate cut by the US Fed earlier than expected. The Indian benchmark 10-year yield should trade in the 7.15 to 7.3% range in the coming sessions, with the status quo expected from the RBI in today's policy.
Well, we've got a lot of stock-specific action that we're tracking for you. For the time being, we'll just run you through the list. We're looking at Zomato, IRB Infra, Jindal SAW, Ircon, IIFL Securities, Electra Greentech, and GSK Pharma. All of them will be reacting to positive news flow. On the flip side, you have Sugar Stocks, Five Star Finance, and Titagarh Wagons that will be reacting to negative news flow.
All right, well, so that's essentially what's coming up here over the next hour or so.